right, Brian. So we said the way we've put together these rules is by common questions that we get asked. We thought it'd be great to lay out what those actual questions are and then walk you through the rules that can help you figure out how to navigate that. And the first one is a big one, and this is one that a lot of Americans are faced with right now. And the question generally goes something like this. How much is too much student loan debt?
Oh, man, this is one. If you want to know the inception story for this one, begin with the end in mind. Is that if you're going to go and take on debt supposedly to better yourself for more income, let's actually set up a rule, and here it is. It's called the first-year financing rule, meaning that we don't want you to take on more student loan debt than what your first year of anticipated income will be.
We already know that getting out into the workforce, starting in our careers is difficult, but it becomes exponentially more difficult. We have this huge burden of debt that we're dragging along beside us. And we've already said a lot of Americans are facing this. Right now, 44% of Gen Z has an outstanding student loan balance. 14% of student loan borrowers say that they owe more than $50,000 right now. And 24% of adults responsible for student loan debt say that I don't think I'll ever actually be able to pay this off. I don't think it's ever going away. So it's become something that folks have just resigned themselves to always having on their balance sheet.
Yeah, this is one of those things where I get sad because so much of education, we're asking people who are 17, 18 years old to make these lifelong decisions. And when you see a stat like 24%, essentially 1 out of 4 people think they'll never pay off their student loans. This is why it's so important if you have a young person in your household, once again, begin with the end in mind so that you don't find yourself in a trap on something that should be so valuable like education.
All right, so student loans is obviously a big thing, a big purchase that a lot of people make. Well, let's talk about another big purchase, and I would say this even hits more people maybe than the student loan. And here's how the question usually goes for us. Hey guys, how much car can I afford, and what's the best way to pay for it?
Let's have some real talk here. For all the ad campaigns in this consumption society we live in, the reality is cars are napalm for your personal finances. Right. You know, it's not the latte effect. It's these big decisions like cars, houses. And this is a big one because I think it's the gateway to bad decision-making for a lot of people when you get out in the workforce and you first start getting your real wages, you know, when you that first job, is instead of letting that money start work, too many people let a high percentage of that income go right into high car payments.
And so what can you do? What's the rule that can protect you? Well, we want you to follow 23-8. What that means is we want you to put down 20% on the purchase of a car, whether you're buying new or used. We want you to finance it for no more than 3 years or 36 months, and your total car payments, all of your car payments, cannot exceed 8% of your gross income. If you can do this, you'll make sure that you keep yourself inside of an affordable automobile, but there are 2 caveats you ought to be aware of. Number 1, luxury cars are a no-go. If you're buying a luxury brand, you don't get to do 23-8. You have to pay for it in cash or have it paid off inside of 12 months, and you never want the amount of your car payment to be greater than what you're saving in your investments on a monthly basis. If you're doing it the other way, you're doing it the wrong way.
So you might be asking yourself, why do we have these rules? Well, let's go ahead and get some facts on what's going on in the current state of this consumption society we live in. The median single income in America right now is $45,140. But guess what? The average new car, $50,080. Do you see how these things... they are completely, they're not supposed to be the same. And I don't want you going out there and running up car debt that exceeds what your annual income is. That is just a recipe. Like I said, napalm for your personal finance.
What's wild is that right now, did you know that 1 in 6 car payments is over $1,000 a month. And yet most Americans aren't even saving and investing $1,000 a month. They are getting it wrong. And while it seems like Americans are driving their cars for longer, it seems like that maybe something is going on. Would you believe right now that 22% of new car loans have a financing term of over 7 years? So there's a lot of folks who only drive their cars for 3, 4, 5 years, and yet they're borrowing an amount for 7 years. They're never getting out from being underwater on their automobile.
Well, it makes sense because this is more of a sales tactic than I think it's people choosing to have car loans for 7 years and beyond. Because a lot of times when you roll into the car dealership, they'll say, hey, what do you want your car payment to
Hey,
be?
what can you afford on a monthly
and
basis?
that's the thing. I don't care what your income is. If you can spread out the amortization long enough, pretty much anything becomes affordable at some point. And that's a disaster. So we want to protect you. That's why 23.8 will make sure that the car you buy reflects what you can afford and also leaves you enough margin so you actually have money left over to start investing for the future as well.
And if you are in the place where you're thinking about buying a new car, we actually have a great calculator for you. You can go to moneyguide.com/resources, and you can play with our car buying calculator. And you can adjust the variables accordingly. And it will tell you, okay, if I want to follow 23.8, how much car can I actually afford? Again, you can go to moneyguide.com/resources. So, Brian, we've talked about student loans, which is a huge purchase people make. We've talked about cars, which is a huge purchase people make. Let's talk about another one that is a huge purchase. And for a lot of people, this might be the single most expensive thing that you ever spend money on. And this, again, is how the question goes. Hey, guys, how much house can I afford? And when I do it, how much should I make as a down payment?
Yeah, this is one that we look. I think we get a lot of credit for being flexible on the first purchase, but man, oh man, do we probably take some flack on affordability on the ongoing side of this. So let's share with you the rule of 3-5-25. And when we say 3-5-25, what we mean is we want you on your first house, your very first house. We give a lot of grace in that, is that we say, look, we asked around to all of our financial advisors, we looked at ourselves, and we had a no hypocrite policy, and we realized nobody's putting down 20% on the first house. We're typically putting down 3 to 5%. So you can, on your first down payment, on your first house, you can put down 3%. Make sure before you even buy a house that you're going to be in this house longer than 5 years. There's just too many friction and costs that you're going to pay out of pocket when you close on a house that you don't want to think of this as a short-term decision. And then we want to keep, and this is the one, I know it's going to squeeze you, but this is why we give you grace in so many other places. We want you to keep your monthly costs below 25% of your gross income. And the reason we want you to do this is because we don't want you to be house rich, life poor, with the inability to build wealth outside of your house. Too many Americans, that's the only place they have wealth is in their house. We're trying to help you build and create your army of dollar bills.
So many people view buying a house as a no-brainer. Guys, no, it's an asset. It only goes up in value. No, if I buy a more expensive house, then I will be able to get more appreciation. It can't go wrong, and that, unfortunately, is just not true. So if you can follow the 3-5-25 rule, again, we'll make sure that you don't justify yourself into making a decision that will derail your future financial wealth building ability. And again, if you are someone who's thinking about buying a house, thinking about moving, thinking about going into the home ownership side of the equation, we have a great tool for you. Go to moneyguide.com/resources, and you can check out our home buying calculator. Again, you get to adjust the variables. We're going to make sure that you fall inside of the 3-5-25 rule so that you make a decision that still allows you to build towards your great, big, beautiful tomorrow.